Good Sunday morning, traders. This is Sam the Trader Geek with your Sunday, November 23rd, 2025 market review and preview video. Hope you're enjoying a great weekend and it's not too cold where you are. We are in a holiday shortened week, so should be interesting to see if the bounce that we had last week continues, but I'll talk about that more in a few minutes. Looking at what we saw on Friday in the major markets, small microcaps leading the way up 2.88%, IWM up 2.83%, bouncing back nicely, as long also with the mid caps at 2.41%. Seems like the smallest sale will be first on Friday. VTI, the Vanguard Total Market Index, up about 1%. About the only things we're down on the day were the VIX, Bitcoin, gold, and the dollar. So the rest of these kind of middle of the road, SPY gaining 1%, Q's up about 0.75%. For the week, VIX was the winner, clearly up 18% on the week, and the dollar gaining 1%, and no telling whether correlation here is indicative, but up 1%, and we can see that affected the Magnificent Seven and the Qs to the tune of 3%. Bitcoin losing over 10% on this week, and the Dow, which was the last one to make new all-time highs, lost 2%, SPY 2%, total market index 1.84%. So nothing in terms of the stock indices gaining any ground, but it's interesting to see that high yield bonds did gain 19 basis points, as did aggregate bonds. So yields look to have gone down. Look at the TLT up 0.71% for this past week. So UUP, that's the dollar, up 1%. Looking at things on a month-to-date basis, and we are going into the final trading week of November, the VIX, clear winner, up 34% on the month so far. Gold still up, eking about 1.6%, giving quite a bit back over the past couple of weeks. UUP, dollar up 0.6%. Worst of them, unless you've been living in a cave, you know that Bitcoin is been very, very weak, down 23%. Mag 7 giving back 6.62%, and the Qs right in line with those, down 6%. Microcaps, which were showing signs of strength into October, giving back 5%. So everything pretty much in the red in terms of equity indices, and even the bonds, despite last week's outperformance, are still slightly in the red. So only gold on the month is up so far, save for the VIX. Looking at quarter to date, and after this week, we'll have just one more month left in the quarter. So we're almost 2/3 through the quarter. VIX, far and away, talking about volatility, being the leader. Gold up 5%, dollar gaining 3%, which is kind of weird when you think about it, that the dollar's gone up 3% and yet gold is still up 5%. Tends to tell you that these commodities, although tied to the dollar, don't always follow, and they do become decoupled for certain periods of time. Quarter to date, Bitcoin down 26%. Small caps down 2.63%, and everything else you can see here, except for the TLT and aggregate bonds, everything is down on the quarter, with the Dow kind of leading the way, up 0.25%. So our positive seasonality, if it's going to assert itself, can't come soon enough. We'll see. Usually this is a bullish week for the market. Let's see if we can build on last week's end of the week strength. Looking at on a year-to-date basis, things look a little greener, with Bitcoin down 11%. So anybody who bought Bitcoin this year is underwater, unless you sold out, of course. Dollar down 3.5%. leading the way, gold far and above everything else, 55%. So I guess the breather here is not unexpected and not well deserved. VIX second place, up 35% since the start of the year. So we had some pretty calm months during the summer, call it July, August, September, and October, where we seem to not have very many 1% down days. And now we're getting them one after the other. And that's usually what happens, kind of the storm after the calm, if you will. Q's up 15% year to date, microcaps 13.61, SPY coming down from where it was about 17, 18%, and total market index up 11%. So still respectable numbers. And if we close the year strong, these will be even better. But I'm interested to see if my not prediction, but my expectation that the SPY would close up single digits, not double digits. My guess is it will be somewhere in the lower to mid single digits, but we shall see. On the sectors on Friday, we can see that retailer stocks up 3.44%, hearing anecdotal evidence of some strength in the retailers coming into the holiday season. IYT transports up 2.77, and materials finally lifting themselves off the ground, along with healthcare showing a lot of strength over the past few weeks, up 2%. XLU, bottom of the sectors, but notice that there were no negative sectors on Friday, at least not the ones I'm tracking here. And some of these are not S&P sectors. There's 11 of them, but I've added a few extras like the transports and the retailers into the mix. And yeah, so it was a pretty positive day. Whether that marked a short-term bottom, could be. That is a positive sign, but we do know that the best bounces come in bear markets. Not that we're in a bear market on an intermediate or long-term basis, but on a short-term basis, we are definitely in a downtrend. Taking a look, where are my sectors for the week? Okay, there's the red stuff. This is for last week. Worst of them was technology, no surprise. Metals and mining down 3.44%. Energy just can't seem to sustain a bounce, losing 3%, and discretionary on the back of Tesla and Amazon down 2.33%. Healthcare, as I said, was very strong. XLP, again, these are defensive sectors that you would expect to perform well in a down market. Communications, and this is mostly on the back of Google, since Meta, which is also part of communications, was no help. Neither was Disney on their poor response to earnings. Retail stocks just down fractionally, but you can see here for the week, only 3 out of 15 here are positive on the week. Taking a look at the month of October or November so far, you can see that healthcare, clear leader above everything else, and staples finally regaining some ground, up a whopping 2%, hardly a bounce back for all these staple stocks like that have been crushed, like Clorox and Procter and Gamble. And I think that, but for Walmart's outperformance this week on earnings, this would have been even worse. XLK 9% down on the month. Metals and mining losing a little bit of altitude, 8.19%. Discretionary down 6. Telecommunication stops 4.03. So with the exception, let's see, we have 1, 2, 3, 4, 4 sectors that are up month to date. Not looking great for the month of November, but you can see here on the more clearly on a quarter to date basis how dismal it has been. Look at all this red down here. Retailer stocks down 7.25%. Consumer discretionary 5.9. I mean, these are saying a recession is coming. Although, um, if you looked at consumer staples, you wouldn't think that at all. But these are just signs that there's weakness. And with the exception of healthcare, this quarter has been pretty dismal. Utilities up a whopping 1%, big whoop, and the energy just flat on uh, the the quarters to date. Taking a look at year-to-date basis, and things are much greener, with metals and mining still far and above the leader in these major sectors, with telecommunications up 18 and technology still up 17.5%, despite the setback so far this quarter. Utilities up 16, communications and industrials. So lots of double digits here. I would say, about half of these are double digits, with the worst one still being staples on a year-to-date basis. Just can't seem to get out of negative territory, but even retailer stocks and consumer discretionary and real estate just kind of barely positive. So taking a look at Mag 7 on the week, you can see that sea of red, only one stock, which has been shining through this whole tech weakness, Google, mostly on the backs of news that Uncle Warren had bought a whole share on, maybe not him, his upcoming first in command, Abel, buying a lot of Google. Where have they been for the last 5 years when Google was just like so hated? And it seems like they came in this year, and now we kind of know why the stock has been buoyed for the past few months. I guess Berkshire Hathaway has been in there supporting the bid. Microsoft really given back almost 8%. Amazon basically giving back that whole gain on the earnings. NVIDIA couldn't hold the post-earnings gain, and Tesla down 3%, with Meta down 2.5%. Meta can't seem to find its footing, but I think it will before year end. If we're going to have a strong finish to the year, and I think that we'll see some piling into Meta to kind of give trailing portfolio managers a chance to add a little bit of extra performance on something that isn't gone to the moon like Google. Taking a look at the quarterlies on the Mag 7, we can see that 4 out of 7 on a quarter-to-date basis are down, and Amazon's flat, with Google up a whopping 23%. Apple is up 6.62%. So mixed bag, but we're back to a situation on a year-to-date basis where Tesla down 3%, and the rest of them are up, with only 2 of them just barely flat. Meta giving up almost everything, and at one point it had given everything back and gone negative. And just Amazon just can't get out of its own way, and Google just head and shoulders above everything else. I mean, what a switch from earlier this year, where NVIDIA and Microsoft were kind of leading the way, and now handing the baton over to Google. But NVIDIA is still in second place. So there you have it, kind of a longer than normal review of what's happening in the various sectors and major indices. Let's take a look at the charts, and as I like to do, take a look at 3 time frames. And we have here the daily, middle is the weekly, and on the right we have the monthly chart. So we can see here we peaked way back on the 29th of October, and since then, in the 25 days since then, we've been making lower highs and lower lows. And so we are in a downtrend, and it was looking like we caught a bit of a bounce here on the 100-day, So don't usually reference that, but there you go. And you know, these moving averages, you can draw 100 of them, and it's going to catch one of them, right? But 100-day is a good reference point. But Thursday was a pretty ugly day, triggering all kinds of sell signals on all kinds of different trading um, approaches. And then Friday, we got a bounce on Fed head Williams' comments, breathing hope into a December rate cut. You can see here kind of a doji like we were about a lot higher, but we came and touched the 8 EMA, this um, light blue line, and pulled back a little bit, but still held up pretty well as we saw here. What you can see here, all right, that's enough. Um, the options implied expected move right here. For last week, it was about 144 points, and we closed like right on it. So we came outside of this expected move, and we did have options expiration. So there were quite a few cross currents on Friday, but despite that, we held up pretty well and closed up on the day and giving us a nice green candle. You can see MACD is definitely still negative and below the zero line. We need to see a turnaround. We have the 50-day at 67.11, so that's going to be a point to hurdle. And again, if seasonality is going to assert itself, this is the week for it to go ahead and do so and show us that we are going to see strength into year end. So yeah, we closed 66.02. That was probably 12 points. Yeah, 12 points. 65.89 was the lower edge of the expected move, and we closed a rounding error above there. Our implied expected move on the upside was at 68.78. We didn't even come close, but again, we were close to, and for all intents and purposes, closed on the options implied expected move. And I mean, here was a day on Thursday where the low was 65.34 and the high was 67.70. So that's basically 200 and something points, 200 and call it 236 points in a single day. And you're going to sell premium inside the short term? I don't think so. Looking at the weekly, we're one time framing to the downside. We can see here that a little more clearly that we hit the expected move and came right back up. MACD did flip negative, though not convincingly so, but it can continue, but it can flip up. We see the RSI is heading for the neutral area, still in the 57 area, so kind of no man's land as far as RSI is concerned. And you can see here on the monthly chart, uh, we did take out the low. Let's see here, 65.50. Yeah, we did take out the low here this month. So 65.22, let's call it, is the low this month. 65.50 is the low last month. So we need to see a close above 65.50 by the end of the week, which is also the end of the month, to not violate and close below last month's low. That would be a good thing for the bulls. MACD is still positive, but you can see now that the fast line is going sideways. And you can see now we did not get that bounce off the 70 level, although it's still early. The month hasn't closed. We are just under the 70 overbought level at 68 on the RSI. So SPX, bearish in the very short term, but still bullish and in an uptrend on the weekly and the monthly trend. So all long-term uptrends are intact so far. So we bounced when we needed to, and after a really bad day on Thursday, we didn't head down lower. Here's the NASDAQ. Again, looks very similar to the SPY, but the NASDAQ was weaker than the SPY or the SPX on Friday. Again, here's last week's options implied expected move, and we closed right on there. So those things mean something, folks. The implied move up here never even came close to tagging it, but we had, I think, about a 400-point move for the week, and we had on Thursday alone, we tagged 24,000 on the bottom end and 222 on the upper end. Try selling short-term premium into that kind of move. MACD very negative and below the zero line, and didn't quite get to the 30 oversold level before we bounced. So we're still somewhat oversold here, but I consider anything closer to 30 oversold. Looking at the weekly, one time framing to the bottom, to the downside on the weekly chart. Looks like this was a bounce off the 21 EMA, and MACD also flipping negative on the weekly. We're kind of in the neutral zone as far as the relative strength index, the RSI. Taking a look at the monthly, we are below last month's low at the moment. So last month's low was 24,207, and I guess we're not really. I mean, we did tag below it. So 24,207 is October's low, and here we have 23,854 as our low, but we are at 24,239. So I guess we're above last month's low by about 39 points, which is really nothing on a $24,000 index. MACD is still positive, but starting to go sideways on the fast line. And then we breached the 70 overbought level, which is not unusual in a pullback like we're seeing right now. So what did we say? The NASDAQ lost about 5% in the last week or so. In any case, still solidly bullish on the monthly and the weekly time frame, but we need to hold up here. This green line is the 21 EMA. We're right here. This is a chandelier stop, and we need to hold this by the end of the week if we're going to see some bounce back in the market. Finally, we take a look at the rut, and we can see here that it had a better day than both of the indices. Surprise, surprise, at least for me, since it's been the weakest of the three major indices that we look at. And this one, I guess, sunk even further on Thursday. So that's kind of par for the course. Hitting and closing right at the ADMA as well. MACD definitely negative here, trying to flip up, but this is only one day. We got very close to the 30 level, and you can see it, the snapback we get when we do see the RSI get close to the 30 level. I think we just basically tagged 32. So that was enough for a nice bounce on Friday to the tune of 2.8%. Candle on the weekly looks a little better than the other two, but this has been going down further. Still one time framing to the downside. And when I say one time framing, it just means that each week's candle is making a lower low. Whether it closes there or not, that's not relevant. The fact is that it is making lower lows on these candles on a weekly basis, but still positive and still can save itself. We still have a bullish chandelier, which is right here. This is a volatility stop. We want to see it definitely hold that. And then on the monthly, MACD also going sideways on the fast line. Never got overbought on the RSI for the monthly time frame. We're at the 57 neutral spot, so we should still be in a bullish formation as far as the rut or the small caps are concerned. So again, on a daily basis, all of these indices are in a downtrend. weekly, also starting a downtrend, but when you zoom out to the monthly and you see the kind of action, we kind of saved ourselves where we needed to be, and now we need to see if there's going to be follow through to Friday's strength. Um, Next, I like to take a look at the VIX and the volatility components, and we can see here that on Thursday we hit the 28 level. On Friday, we didn't even get there, so we had a little bit of a lower high. And so if we take this high on the spike high on Thursday, and then see that we had a close, and I'm going to maximize this. I'm going to show a couple of things here. All right. So we had a close above the upper Bollinger Band on Thursday, and we had a close inside the Bollinger Band on Friday. So that is usually a buy signal, but it needs to be confirmed with a lower close on Monday. So something lower than 23.43. If we close up, that kind of negates the buy signal, and that's a short-term buy signal, which is subject to some false signals like any other indication. But the other thing to know, and a feather in the cap of the bulls, is that it's something that McMillan calls the spike low. So the VIX buy signal based on a spike. And so on Thursday, we spiked up to 28.27. And if you get two closes that are at least 3 points lower than the spike, then that's kind of another bullish signal. So again, 23.43, this qualifies on Friday, and we just need another close that is somewhat under 25.27, and that's another indication. And that particular buy signal would not be avoided until we took out this high once again. So a lot of things lining up to say that we're going to get a few day bounce here, which would not surprise me. But we do have, as we'll see, lots of economic reports returning into the fray, even on a holiday shortened trading week. Taking a look at the VVIX, and that's the volatility of the volatility, still above the warning track, and I consider 110 the warning track here, but definitely not where it was. So we were up as high as 132.72, and then on Friday, we did not take out that low in the VVIX. So the volatility is still showing some concern here, but if we can close under the 110 level, that would make me feel better for the bulls in terms of a continued rally. Taking a look at VIX pricing, as you know I like to do, our next monthly expiration is in 23 days on 17th of December. And we closed at 23.43. Let's call it 23 and a half. See if we have half strikes. Yes, we do. All right. So 23 and a half. You go out $1 out of the money. We're pricing in at what? $1.76 is the mid for the calls. And then we go out to the 22 and a halves. If we buy those are at $3.20. So we have about twice as much for the puts as we do the equidistant calls. So it's not a big differential. I've often seen the puts or the calls pricing as much as 5 to 10 times the other. And that's a more powerful signal. This is just, okay, this is a check mark in favor of the bulls, meaning that the fixed calls are cheaper, and we ought to see some benefit to the bulls in terms of this indication. All right, so let's take a look at the VIX futures as a final thing to see where we stand in terms of the contango or backwardation. We can see here that well, that's not the current contract is at 2150. That's the current VIX contract. So that's lower than the current. That's lower. So we're still in a bit of backwardation. It isn't until yeah, none of these. So basically the VIX contract are all lower than the spot VIX, which we saw is at 23.23. So none of these, except this one, I guess is spot on. Let me make sure I'm not misspeaking. So yeah, 23.43. So this is still has the VIX in backwardation, and that indicates that the risk is here and now more so than in the future. But I will caution that even with positive seasonality pending, we still have VIX in going out, all the way out to July. It's in the 23s and 22s. So that's a bit of a warning sign about what the uncertainty is into 2026. SPX, last thing here, in terms of expected moves, 3.5 trading days till the end of the week. Thursday is a market holiday, as everybody knows, and then Friday is a half day. And so we have about 146 points for 3.5 days. And keeping in mind, last week was a full 5-day week, and we had 144 points. So we're definitely packing more into this, and that makes sense since the VIX, if we put it back up here, is higher on a weekly basis than it was the week before. So here you go. We closed the week before at 20, let's say, and here we're at 23.43. So the higher volatility means that we're going to have a higher expected move on the week. I would be definitely a buyer of options, not a seller of options, especially with what we have coming up. Speaking of which, we have the economic calendar as some of the government reports get reinstated. So doesn't look like anything is scheduled for Monday, but retail sales and core PPI coming out on Tuesday. Doesn't look there's a caveat like here. So when maybe we are going to get these for sure. More consumer confidence and pending home sales on Tuesday. Wednesday, we have initial jobless claims, which is normally on Thursday, and a delayed September durable goods order. And Thursday, Turkey Day, nothing going on but the football games and lots of good food, hopefully for you. And Friday on a half trading day, we have Chicago PMI. I guess that is. So light week, but Tuesday looks to have some market moving events. And as far as earnings go, we have a couple notable companies reporting. Zoom after the close on Monday. And then on Tuesday before the open, we have Alibaba reporting, ADI, Kohl's. So some more retailers, Best Buy, maybe giving us an early read on some of the early Christmas shopping season. Burlington, another retailer. And then after the close, we have Dell and Workday, Nutanix, and other tech names. Zscaler is also well known, Autodesk, and former momentum darling Ambarella reporting, and NetApp. That one I haven't heard from in a long time. And then Wednesday, John Deere reports, and the rest are meaningless. So obviously winding down this earnings season, probably have some more the week after. So in all, what I would say is that this is a critical week for the market to find its footing, and whether it is the bottom or not, this is a buy the dip, sell the rip type of market. So until further notice, I mean, this was a good day on Friday, but it wasn't really a rip your face off rally just yet. But we've seen time and time again how this can develop into, uh, and kind of fool the bears into some complacency and continue to short into them and then rip their faces off. So on an intermediate and a long-term basis, the bulls still have the advantage. On a short term, it's be cautious here. We have to get above this 50-day, and we have to do it with authority if we're going to see that positive seasonal rally into the end of the year. But with that said, I wish you all a very happy holiday week, Thanksgiving. And you can find me on X or Twitter at Trader Geek. If you like this video, let me know. Click a thumbs up or what have you. And I will see you back here next week for the next market review and preview. Take care and have a great rest of your Sunday. Bye-bye.